All right, so one thing I've learned over the years um, at these major bottoms, I'm pretty much the only one that ever gets these bottoms, and the reason is at a bottom it never looks like a bottom. So no matter how far down price has dropped, everybody else is always expecting it to continue lower. Whereas when we get into a timing band for a bottom, I'm expecting price to turn. And it doesn't matter to me what the chart looks like in real time because I know when the turn comes, then in hindsight, it'll be pretty clear that the turn was coming. It's just in real time, nobody will see it except for me. And I'm very often, I can be early. Um, and, I guess that's probably what most people are worried about is being early. I'm not terribly concerned about being early. It's just a part of this business. It's very tough to time exact tops and exact bottoms. But I do know that my odds of making sustainable gains are better if I can buy into oversold conditions and sell into overbought. And so while everyone is expecting gold to continue lower next week, and maybe it will, I'm on the other, I'm on the other side of the boat. Everybody's getting on the same side of the boat, and that side is, everybody's just become conditioned over the last almost 3 months to expect um, the metals sector to just keep going down. So um, everyone is just looking, lower. But I'm looking for a turn, and uh, I think we either may have it or we're very close. So here's a couple of things to be aware of. You can see we're starting to get a divergence in some of the oscillators. This is a 5-day RSI. You can see here as we made a lower low, we've got a divergence here, and if we were to make a lower low early next week, we're going to have another divergence. That doesn't always mean that the bottom is within a couple days, but it's a good sign anyway, and especially considering how late we are in this daily cycle and especially the intermediate cycle. Another oscillator I like to look at is the Copic curve. Has a pretty good record of spotting uh, trend changes. And as you can see here, the oscillator has turned up on the mining index. Now again, that doesn't mean that we can't get a lower low and get a divergence on the oscillator. That does happen from time to time, but usually when this oscillator turns up, if it doesn't mark the exact bottom, it's usually pretty close. All right, so moving on to the weekly charts, just common sense logic would suggest that buying oversold conditions and selling overbought, is um, a tried and true method to make money. The problem, of course, is that when a market is going down, oversold always looks like it's going to get more oversold. So you can see at every one of these bottoms, it just didn't look like a bottom in real time, but the oscillators were oversold, and it turns out that that was a very good time to buy. Every once in a while, the flaw in the system is every once in a while that oversold just gets more oversold, and you have to um, endure a drawdown. But over the long run, over the long haul, many years, um, you will consistently make money by buying oversold conditions and selling into overbought conditions. So you can see here, this is the weekly chart of the mining stocks. You can see we're oversold. We're oversold on the stochastics. So history and just common sense would dictate that this is probably a good spot to um, start buying, or at least start looking for a turn, be prepared to buy. Not really a good spot to just expect prices to keep going lower and lower. Again, every once in a while, oversold can get more oversold, but over the long term, over many years, that's not a very good way to invest, because you end up missing a lot of signals. You can see here there was a lot of signals where oversold didn't get more oversold. It just turned very quickly. This got very oversold, and the reason why it did was because the CRB was moving down into a multi-year, 3-year cycle low, and the stock market was moving down into a 4-year cycle low. So it generated uh, a tremendous amount of selling pressure, and everything got sold. So, um, obviously, that is the reason this got oversold and then stayed oversold for a considerable period of time. We're not in that um, setup anymore. The 3-year cycle low is behind us. The next one's not due till 2021. So we really shouldn't see this kind of extreme and persistent selling pressure for another 2 or 3 years yet. So at this point, this just looks like this is a point at which I want to be looking for a bottom. Doesn't mean it has to come Monday, doesn't mean it has to come Tuesday, but it means that it's probably not the right approach to just expect this to keep getting more and more oversold and to last for many weeks into the future. Um, that kind of mentality over time, over many years, will cause you to miss a lot of opportunities. And these are the kind of opportunities where you can make sustained money. And by that, I mean you can get into oversold conditions, make a good amount of money before price becomes overbought, and then you can sell at an overbought level, and you can lock in some nice gains. You don't have to worry about um, you the way most people trade is their emotions tell them it's okay to buy up here when it's overbought, because they expect this to just stay overbought forever, and then they get caught when price turns and goes back down. So, uh, just common sense logic would dictate you're better off in the long run to be buying oversold conditions and selling overbought. Right now, the metals uh, sector is oversold. On the other hand, as I've been saying for a couple of weeks now, the stock market is overbought and not a great time to be buying. A good time to have a close stop, and I would imagine most people, if they did have a close stop, they get stopped out this past week. And you can see, I mean, we're heading in the right direction. If we can continue this correction for a few more weeks, push this oscillator back down to an oversold level, then we'll have a buying opportunity in the stock market. And I would like to see the weekly stochastics at least come back down to 50. And of course, oversold would be even better. But it's going to require several weeks for that to happen. Now, that doesn't mean that this can't turn and go back up and become more overbought. But over time, over many years, this kind of a strategy of buying, when price is overbought, will probably result in either long-term losses or just a stagnant portfolio that doesn't really produce anything. You gain a little bit and you lose a little bit, so you basically just don't go anywhere. Again, just common sense. The problem, of course, is that humans are emotional, and when emotions are in play, then common sense and logic goes out the window. We can't think straight, and so we do stupid things like we buy when price is overbought, or we sell when price is oversold. But right now, I think the opportunity, based on history and based on where the oscillators are at, I think your opportunity is much better to produce some sustainable gains in the metal sector. And if we can continue this correction for a few more weeks and push these oscillators back down to an oversold level, then I think you're going to have the right setup in the stock market to enter some long trades and make some sustainable gains in that sector. But right now, this is just not, uh, the oscillators haven't cycled back down far enough for me to be really interested in the stock market at this point.